Hi, today's lesson is going to be 19-01B, and we're going to be doing the journal entries for a job order cost accounting system. In a job order cost accounting system, we're going to be manufacturing units that are not similar in nature. They're usually custom order units that we will be manufacturing in a job order cost accounting system. And what I want to show you today is I want to show you the journal entries for this particular type of cost accounting system. We're going to start by creating the journal entries for materials that are purchased on account. Materials is an inventory account, and we're going to debit it because it's an asset account. The materials that we purchase are going to go into our materials account at $770,000. We're going to credit accounts payable for $770,000. Materials requisitioned are $680,000, of which $75,800 was for general factory use. So what we're talking about here is taking some of the materials out and placing them into production. When we take our direct materials out and place it into production, we're going to be debiting the work in process account for the amount of the direct materials that was used. So I'm going to debit my work in process account, and I've got to figure out how much were my direct materials. I'm going to do this by taking my calculator, putting in 680,000 of the total materials that were used. I'm going to subtract out 75,800 because they told us that those were for general factory use, and that would be a part of indirect materials, which become factory overhead. The difference between these is the direct materials that we would have used. And so 604,200 is going to be debited to my work in process account. I'm also going to debit my factory overhead for the amount of the indirect materials. The indirect materials was given at $75,800. The total amount would be credited to the materials account. Because materials is an asset account, when we credit it, we're reducing the materials by the total given amount of $680,000. I'm going to check my work just to make sure my math is correct. And so again, when you requisition materials, you're taking materials out and you're placing those materials into production where you're wanting to convert them to finished goods. We take them out of the materials account, and part of those, which are direct materials, will go directly into work in process, which work in process is an asset account. That's why we debited it. We're increasing our asset account by the amount of the direct materials. Our indirect materials would increase our expense account called factory overhead. And so that's why we debited that. The two of these together are the total materials that were requisitioned or were used during that period of time. We'd have a credit to materials because materials will decrease because it's an asset. For C, we're talking about factory labor that was used. The total amount that was used was $756,000, of which $182,000 was indirect. What we're going to debit is our direct labor for the amount of direct wages, and that direct labor would go straight into work in process. So our work in process account is going to be holding our materials, which we showed you here that were direct materials. It's also going to hold direct labor, and it's also going to hold our applied factory overhead. So we're debiting the work in process for the amount of the factory labor that was direct. To find the direct factory labor, we have to take 756,000 and subtract 182,000 from that. They gave us the amount that was indirect, so we had to find the direct labor amount. When I subtract those, it gives me $574,000 is my direct labor. My indirect labor would be debited to my factory overhead account for $182,000, and that was given. We'll have a credit to our wages payable for the total amount of wages payable, which was $756,000. I'm going to check my work just to make sure my math is correct, and then we'll move on to the next part. Other costs incurred on account for factory overhead were $245,000. If we incurred factory overhead costs, we're simply going to debit our factory overhead for $245,000. It tells us that we have also incurred selling expenses of $171,500. We have incurred administrative expenses for $110,000. And then we're going to credit our accounts payable because all of these costs were incurred on account. So I'm going to have to add up all of the costs. All of the debits are going to be added together. So 526,500 is the total of my accounts payable. Okay, and I've got a problem because I left off 600 here. So let me restate this. And I'll add 600 to this. It's always a good idea to check your work. Okay, so in the next part of this, in transaction E, it says our prepaid expenses have expired for factory overhead at $24,000. For selling expenses, $28,420, and administrative expenses, $16,660. I'm going to simply debit my factory overhead for $24,500. I'm going to debit my selling expenses for $28,420. My administrative expenses for 16,660. And then I'm going to credit the total of these to my prepaid expenses. When you use prepaid expenses, your assets will decrease. Your factory overhead is debited. In this case, they use the controlling account factory overhead. Controlling just means this account's made up of many different accounts. So technically in the real world, you probably would have done like a prepaid factory insurance or something like that. But in this case, they're just using the controlling accounts for these. The same is true for selling and administrative expenses. It probably would be broken down just a little bit further. But anyway, you're going to credit your prepaid expenses for the total of your debits. On the next part, we're depreciating our factory equipment, which again would probably be depreciation expense on the factory equipment. But in this case, they didn't give us that to choose from. They just put it all in the controlling account called factory overhead. The amount of the depreciation expense would have been $49,500. And then our office equipment depreciated, and so they've got it technically as depreciation expense on office equipment. They got a better category for that, I think. But technically it's an administrative expense, so you could have used administrative expense if they had given you a choice of that. But the better item is the one that's more clearly related to the account title. Depreciation expense on the office building was $14,900. And then we would credit accumulated depreciation on the buildings and the equipment for the total amount. On the next one, we're applying our factory overhead to our finished or to our jobs. They're not finished yet, but what we want to do is make sure that our jobs have all of the cost applied to them. And so what we mean by applying factory overhead is that we estimate an amount of factory overhead to reduce the factory overhead and put it into the work in process account. The work in process is going to hold our direct materials, our direct labor, and our applied factory overhead on the debit side. So our work in process is going to be debited for $568,500. Our factory overhead account will be credited for $568,500. So technically you're adding up all your debits and factory overhead. You're applying an estimated amount as a credit, and then you're debiting it to the work in process account. So at the end of the period, you could have a balance left over that would be either over applied or under applied factory overhead. Be sure and read your chapter to see about that overhead that's applied and under applied. So I think that's an important part of learning how to do these transactions and fully understanding them. In H, jobs completed were 1,500,000. What jobs completed are finished goods. So once you take the materials out of the materials, put it into work in process, you're going to convert the materials in work in process until they become finished. Now we know that we have some finished goods. The finished goods is an asset account. It's really an inventory account, and it would be debited for the amount of 1,500,000. We'd have a credit to the amount of our work in process because we're transferring out of the work in process the materials that we have actually converted to finished goods, and they'll go into finished goods. So work in process has to be credited here for 1,500,000. And then once we've got it in the finished goods account, as it is here, then we're going to turn around and try to sell some of our inventory. In this case, we only sold this amount of our inventory. But once we sell the inventory, it's going to go into cost of goods sold as the expense account that we have to debit for 1,375,000. And then we're going to credit our finished goods account. The finished goods is an inventory account, and when they're sold, we ship them out to the customer. And so we'd have to create a journal entry to record the cost of those goods that we shipped out. What's missing here is another journal entry that they didn't ask you for whatever reason, but you should have a debit to maybe accounts receivable or cash and a credit to sales that goes along with this for the marked up price, but they did not ask you to do that. That's how you do the journal entries for this particular problem. So I'm going to stop sharing here, and I'm going to stop recording. And we're going to stop the recording.